Every day I look at a bunch of headlines from sites like CNBC, Yahoo Finance, Bloomberg, and a few of them stood out to me that I'm going to address today in this video. One's about real estate prices, the hollowing out of the commercial real estate sector, and pretty strong fourth quarter GDP. Nothing in this video is intended as personalized trading advice for you. Let's get into it. This is from CNBC. US GDP rose 2.9% in the fourth quarter, more than expected even as recession fears loom. It was actually a pretty strong print. The GDP rose at an annualized pace of 2.9%. So pretty good breathing room away from a recessionary level of a negative GDP growth. And they go on to say that consumer spending weakened from the previous period, but it still is not negative. But as Peter Leeds always tells you, just wait. And in terms of recent economic activity, there was a lot of buying by companies because they were filling up their inventories. So it was sort of a false read where you think the economy is stronger than it is. So the numbers come in pretty strong, but it's just a lot of inventory on the books and the warehouses of a lot of these companies because they're replenishing the inventories they had that were falling. But it goes on to say, a sharp slide in housing helped pull down GDP, while boosts in government spending and private investment aided growth. First of all, boosts in government spending does not aid growth. It's an expense, not a source of income. Productivity is a source of income. If you have a business that makes something and sells it, that's helping the economy. If you work for the government, that's a cost. You are an expense. Everyone's paying taxes to pay your salary for whatever you're up to. Our government is much too large and unnecessarily large for what we need, how many role players we need to take care of everything that needs to be taken care of that would be in your best interest. But let's get into the sharp slide and housing prices that I wanted to call out here. The U.S. economy finished 2022 in solid shape, even as questions persist over whether growth will turn negative in the year ahead. Spoiler alert, it will. Since the beginning of 2020, we've been in a recession twice. Last one very slight and limited, and they didn't count it because they said the unemployment rate was too strong. Fair enough. We're not done with this anyways, guys. Just wait. You'll get into the recession. It'll be unavoidable. It'll be self-evident. And we won't need to be getting into all these technicalities and changing the ways we look at things to try and change the reality of what's actually happening on the ground. Here's the part I want to point out to you. A 26.7% plunge in residential fixed investment, which is just basically showing you the slide lower in housing prices. And they say that attributed to about 1.3% of a decline. Fine, whatever. But the point is, housing prices have plunged 26.7%. And they go on a little bit lower to say inventory increases also played a significant role, adding nearly 1.5 percentage points to the GDP. And that's what I'm talking about. A lot of companies are replenishing their inventory. It's kind of like hiring a bunch of government workers. It doesn't really help anything. The mix of growth was discouraging, and the monthly data suggest the economy lost momentum as the fourth quarter went on, wrote Andrew Hunter, senior U.S. economist for Capital Economics. We still expect the lagged impact of the surge in interest rates to push the economy into a mild recession in the first half of this year. Correct, and correct again. And as I always tell you, when they raise interest rates, which they're going to do tomorrow as well, there's a delay or a lag before those interest rate increases start having the real effect on the underlying economy. 64% of Americans are living paycheck to paycheck. Compared to 2021, 9.3 million more Americans said they were stretched too thin. A few key money moves can keep your budget in check going forward. Let's see here. Cut spending, boost savings. Wow, thanks CNBC. And here's one that you should take notice of, even though I don't feel like it doesn't affect you directly. France hit by new wave of strikes against Macron's pension reform. This is what we'll see here as well. What you're seeing there is that there's trouble with the pension funds, and so they start saying, well, okay, here's what we'll do, and they move stuff around, they make changes, they have reforms to the pension, and it's completely, wholly unfair to the people who are owed the pensions. and so they take to the streets. That hasn't happened here yet, and it will happen here next.
There is massive rejection among the public of this plan of President Macron's to increase the age at which you can start drawing your state pension from 62 to 64.
In this next part, I really want you to pay attention to. It's about San Francisco, but keep in mind, wherever you live, any city, the same thing happened with Seattle, the same thing's happening with Calgary, Canada, the same thing's happening in just about every major U.S. city right now. The internal core is hollowing out. There's all this office vacancy. So when they talk here, I pulled out certain parts of this interview, but not the whole interview. So just the highlights, and keep in mind that this applies to whatever city you live in. This is just demonstrating what I told you was setting up, and now here we are.
San Francisco has an empty office problem, and it starts right here, in the core of the city's downtown. There is 27.1 million square feet of empty office space in the city. And to put that into perspective, let's take a look at San Francisco's largest building, the recently completed Salesforce Tower. There are nearly 20 Salesforce Towers worth of vacant office space in the city.
Now keep in mind, just about every core of every city is a renter's market. You want to sign a lease? Now might be a time to get a really good deal, lock it in for a long time. There's a lot of vacant office space, a lot of really motivated landlords.
So San Francisco has a vacancy rate right now at around 25%, and before the pandemic it was extremely low and almost non-existent.
And pay attention to this next part, especially the part about the huge deficit that they're running.
Well, the economy has had some major impacts. We are facing an over $700 million budget deficit, mostly as a result to the challenges around our empty office spaces, as well as we're seeing businesses close in the financial district.
It's even referred to as the work from home capital of America, with 46% of workers working from home in 2021. Up from 7% in 2019.
And now you can see in real time what happens when the downtown core gets hollowed out.
With many workers no longer commuting to the city, the local economy continues to suffer and office vacancies continue to rise. The city is now experiencing its highest office vacancy rates in nearly 30 years. And as leases run out, many companies are opting not to renew.
The point is, this trend is just going to keep on continuing. It's going to keep on getting worse. And remember, we're not just talking about San Francisco here. We're talking about Boston. We're talking about Dallas. We're talking about Jacksonville.
San Francisco is tied with Boston as the second most expensive city in the U.S. to rent, ranking behind only New York City, with the median price of a one-bedroom costing $3,000. And the average sale price of a home in San Francisco was $1.35 million in November of 2022.
And what a lot of these municipalities are putting their hopes on is converting office buildings into residential buildings. This is a massive trend right now. A lot of cities are doing it. It'll take pressure off of the housing prices and housing availability, and at the same time it'll address the problem of these vacant retail offices.
From 2016 to 2021, there have been 218 office conversions in the U.S. And so far, in 2022, there have been 42 completions with 21 underway. In the U.S., New York City, Detroit, and even Kansas City have all launched similar initiatives.
I'm trying to leave you guys alone with this interview, but I had to say something about this part. Just listen to what the real problems are with all of this. It's all self-imposed. They're running things, and I'm not blaming this particular government. I'm saying that all organizational structures are not in your best interest. They're not efficient, and they are clumsy, and they create problems which there didn't need to be.
I think some of the barriers that we see have a lot to do with some of the policies that exist. Additional impact fees, community benefit fees, transportation fees. Like, you have these laundry list of fees. And at the end of the day, the developer and the people who are investing in these projects, they're going to make sure they make their money. They pour those expenses into each of the units. Every time we add another fee or another requirement, that's another expense for the average everyday San Franciscan, and why I think housing has gotten so out of control. Everything that you have to do to build, and then on top of that, we make people go through an insane process which takes an extremely long time.
Okay, I'm going to wrap it up here with one more final clip. Please subscribe to the channel and help support the Peter Leeds team as we keep bringing you great information just like this.
San Francisco already has the highest construction cost in the world, with an estimated cost of $350 per square foot for a high-rise apartment.